But what I am going to go through is I'm going to go through trading Bitcoin using market profiles and footprint charts, just simply because Bitcoin's been rallying the last week. So let's get into it. Bring you all up to speed, okay? Even if you don't watch cryptocurrency, it's irrelevant, okay? It's a chart nonetheless, and there's a principle to be had here. So what we're looking at, 30-minute Bitcoin chart, as you can see, trend line. Okay, it's not the trend line that's caused it. It's just simply we've taken out a series of, consistently lower highs over a period of, almost a month. Okay, so eventually we've broken that series of, sort of lower highs, and the market's catapulted. Now we confirmed in that break by the volume for one, but also the price change. Okay, so we've got this break. Now we can see this on a candlestick, and very often, as traders, we go, cryptocurrency was a buy and it rallied 10%. But the problem is, by the time we notice it, we're sitting somewhere up here. Okay, opportunity's gone. Now this is where footprints and profiles start to become a little bit handy, because just because we miss an opportunity doesn't mean we can't learn from it or be aware of the next opportunity. Okay, that's what we're going to do here. So again, just to sort of narrow it in a little bit, the crux of what I was trying to drive home is to, timing when, certain tools become more relevant, is that if we look at cryptocurrencies of the last, since the end of the year, okay, effectively, all you have to do to determine if something's giving you an opportunity is look at the range. Okay, if you take the average range over the course of, almost the last 3 months, we've been trading in, call it an $80 range. Okay, now just do a bit of number crunching. If you're trading futures, that means that the market's trading in a 16-tick range. Okay, they trade $5 per tick. Now I'm going to just nail that down a little bit. If you have to cross the spread to get in other words, if you have to enter the market and pay the spread, okay, you're looking between roughly 5 to 10 ticks. Okay, hopefully you can all start to see the maths. If the market's only trading in a 16-tick range and you have to pay 5 ticks, that means that in essence you're getting at the absolute perfect price every single time in order to make money. Okay, bear in mind also that every time you cross the spread and you pay up on the spread, you're paying 5 ticks. Okay, so you start minus 5 ticks, and then you're still expected to make money in what's left of the range, call it 11 prices. So I hope you can start to see the dynamic there of what I'm trying to say, is that if you've been making money in cryptocurrencies, trading futures that is, right, you're extremely gifted in picking the absolute perfect prices because the market just hasn't been moving. And that's the simple case. Okay, so using profiles and using footprints over the last 3 months has not been ideal because it's not been presenting opportunity. Okay, but it is presenting opportunity now, and that's what we want to assess, that's what we want to look at. Now, if you do want to ever understand Bitcoin and when it's potentially showing you opportunities, simply get a daily chart up and go and put the average of the range up. You will note when the average of the range is decreasing, the opportunities are decreasing. When the range starts to turn and increase, the opportunities will increase. Okay, so going to have a look at that, and just to confirm that and show that to you, this is pretty much almost the last 8 months of cryptocurrency. So again, what I wanted to show you is when we have a pickup in the range, what do we see? A pickup in the volume and also a pickup in the opportunity. Okay, market was trading between 6,000 and 8,500. Okay, there we can make money. Then suddenly, what did we see? Average range drops off. Okay, what did we see the opportunities do? They completely dried out for 2 months, no opportunity. Suddenly, what do we see? The average picks up again. What do we see? Opportunity again. Suddenly, the range and averages drop again. What do we see? No opportunity. Okay, so learn to just identify when there is opportunity. That's the hard part. Okay, the easy part is then once you've identified the potential for opportunity, is to go and apply yourself accordingly, and that's what we're going to use the profiles and the footprint for. Now, what you're looking at here is a daily footprint. Okay, I want to just show you something very, very interesting that's come about since we saw that nice, very aggressive 10% rally, last week or the week before Friday. Okay, very simply, there was news about JPMorgan issuing the JP coin or whatever it is, their own effective coin that's backed by the the blockchain technology. Okay, now why this gives Bitcoin a ramp is very simple. Okay, cryptocurrencies tend to be linked to blockchain technology. Okay, that's quite a bit of a fallacy. Cryptocurrencies just use the blockchain technology. They don't give you an exposure to any kind of blockchain technology. Now, JPMorgan in essence has developed their own blockchain, and instead of clients transacting in dollars, they'll effectively take their dollars that'll be converted into JPMorgan coins, and you'll effectively transact with other JPMorgan clients with JPMorgan coins. Okay, but they're all backed by $1. Alright, so it's real money effectively backed by the US dollar. Now, this is sexy. This is important because it effectively means that we do have an alternative currency to a US dollar. Okay, now this isn't a new concept, so don't make no mistake, it's not a new concept, but because it's linked to cryptocurrencies, it means that cryptocurrencies will get piggybacking off of this JPMorgan news, and that's kind of what we've seen, and that's why we've seen now almost a 17% rally over the last sort of 7 sessions. Okay, that's it, that's the fundamentals. What we're more interested in is this, okay? If you go look at the average volume in Bitcoin trading, we're averaging around 1,200 contracts per day for almost 3-4 weeks. Suddenly we do almost 8 times that amount. Okay, what does price do? It responds. Okay. Now remember, what we're looking for when we broke that trend line is we're looking for a change in the price action, and that's all it is. It's about being prepared for the eventuality. Okay, trend lines can keep going for as long as they want, but when we get that confirmation of volume on the break, that's when we want to be entering and executing. Now, what is interesting on this daily footprint and why I like it is note the light shading here. And, we talk a lot about this in the footprint course, but light shading just indicates to us what we call an LVA, or a low volume area, or a lot of buying and no one providing liquidity. Okay, if there's a lot of buying and no one's providing liquidity, it's telling you that the mass market consensus is to the upside. Okay, now so long as that mass market consensus remains, and it remains untraded, which we can see, the market should continue in that direction. Okay, and this is very much not just a footprint principle, this is very much a market profile principle, and I'll show you that in a minute. Okay, eventually, 5 sessions and nothing going on, difficult to trade, note the volumes, no volume. What do we see? 13,000 contracts. Okay, new record high volume for the year. Again, we get the catapult, another sort of 8-9%. This time, what's interesting is notice the difference in color. Okay. In this example, we had a lot of low colors. Now we're starting to see a lot of dark colors. Now, a lot of you are going to say, okay, so that means it's not a low volume area. Okay. What's interesting about it this time is notice what price has done. In other words, there's been a lot more liquidity provided, a lot more sellers willing to sell, but what has price done? It's kept navigating higher and higher and higher. So it's telling you, even though there's more selling, there's even more aggressive buying this time, and they're willing to be aggressive even at higher prices. Okay. So it's starting to tell a story here. It's starting to tell us that this low volume area now effectively is, the support in the market. So long as that maintains, Bitcoin's got a very, very strong trend to the upside. We've seen a confirmation of that trend. Okay. So what I'd say is start keeping an eye on this market now. We're going to start to see that average daily range increase, which means opportunities are going to increase. And that means you can start to use the footprint, you can start to use the profiles to determine when those opportunities are there and ultimately execute. Okay, now this is what it looks like on a market profile. Again, like I said to the question that was asked was, can you use market profiles? Well, the simple answer is sometimes no, it just looks very ugly. Okay, but the crux of the matter is a low volume area, it doesn't matter what market it is, a low volume area, regardless of the market, is a very unique principle. Okay, it tells us that down here, we could see the market transacting liquidity, the market then catapulted, and then it transacted liquidity higher. The fact that it's been unable to trade this area now means we have got a very significant low volume area in the market. More importantly, what did we see in the days preceding? Volume, volume, volume. Okay, so there was a lot of selling coming in where? At lower prices, but it was equally being absorbed by the buyers. Okay, so we now have a significant support at 35.50. Once that support's held, we've then catapulted higher again. Okay, now where I want to leave this with, and again, it's nice that it's relevant. This is obviously from today, the 19th of Feb. But where this is relevant is note what the Bitcoin's done today. Again, it's formed a distribution lower down, but it's also formed a higher distribution. Okay. Now, typically speaking, in profiling terms, we call this a double distribution. So how it works, so long as the top end of the distribution holds, in other words, so long as we cannot get below this 3,800 mark, the market will continue to trend in the upside. Okay. The moment it gets below 3,800, we then likely to see the market pivot and begin to fill out this low volume area between 3,700 and 3,800. Okay. Very, very unique profile strategy. But again, hopefully that answers your question. Yes, Bitcoin is tradable using a profile. The principle is the same. It doesn't matter the market. You just need to be aware of what that, what the principle is, and then ultimately what the strategy is behind executing that principle. Okay, so there you have it, guys. 35.50 is now the key support in Bitcoin. So long as that holds, the market's going to keep rallying. Our next bit of support is 3,800. Okay, below 3,800, we should fill out to 3,700. Otherwise, we're going to be testing, 4,000, back up to 5,000, back up to 6,000. Okay, the important thing is where it goes is completely irrelevant. Okay, what's relevant is what can we objectively view on the charts? What are the charts telling us about the market? And ultimately, how can we apply ourselves, as the markets obviously show us these cues?